Hi guys, thanks for tuning in to another episode of Nuggets News. Today I want to talk about best crypto portfolio structure as it currently stands in 2019. The video I did back in 2017 was one of our most popular, and if you followed those general principles, you've done extremely well as long as you took some profits along the way and didn't get too greedy. So I'm going to talk about the portfolio structure that I've personally built and some general themes. Obviously, this is very subjective. Adapt this to your own personal style. Everyone has their favorite coins, projects that they've researched or done the most about. And in terms of general advice, crypto should be only one part of your overall investing portfolio. But none of this is financial advice. So please apply this to your personal circumstances. Now, as a general rule of thumb, crypto is the most risky asset class out there. So a younger person might be happier to have more exposure to crypto. If you're an older person or closer to retirement, you probably want less risk in your portfolio because you're going to need that. So we have to acknowledge that yes, crypto itself, the entire digital asset class, is very, very risky before we agree that we're going to dive in. So when I've got my risk scale here, which I'll talk about in just a second, this is only applicable to the high risk crypto. So relatively speaking, I'm going to talk about the different types of digital assets and how they fit in to that portfolio. Okay, so let's run through these different asset classes from lowest to highest risk. And we've got the stable coins, and these come into the equation when I'm going to talk about taking profit, but also a way to earn a little bit of a reward these days. There's a number of protocols out there that will let you earn annually a little bit of a dividend, you can think of it as, or a bit of a yield. And in the global environment, when you can't get a lot of interest on your money in the bank, some people, that is very attractive, the rates you can get. But please be careful. There's so many scams out there that will promise you these returns as well. So stick to the main projects that are well researched. And the flip side of that is we don't want to be putting all our portfolio into something like this just to earn a yield, because often it requires you to lock this up in a smart contract or their platform. So that in itself is maybe, a tiny risk. So maybe a smaller portion of your portfolio you can set aside for earning that yield. But personally, I don't include that in my portfolio at this stage. So I'm going to talk about the mix that I have and the types of assets and the percentages why I've got that. So I believe that Bitcoin is, the oldest asset class out there now, the biggest. There's so many things that are in its favor. Regulation, we have more certainty around it now that it's not a security. It's on every exchange. It's got the brand name. So I believe that gives it, less risk than all these other assets. Now, money, finance in general, I believe that this is the biggest thing that's going to be disrupted by blockchains, banks and payment systems. Now, there's other projects out there as well, but for me personally, I believe Bitcoin is the king, and I currently have around 40%. Now, that's maybe a little bit higher recently because Bitcoin has outperformed all the altcoins so much, and I'll get to that in just a second as well. Now, the second biggest area that I believe is going to be disrupted by blockchain technology is platforms, or the Web 3.0, you might have heard of it as. We know that the tech giants have benefited a lot from our data and the centralization, that point where they can then on-sell all your other data. So I think the web is going to be disrupted and decentralized. And you might have heard of the FAT protocol thesis. And what that basically means is that the internet itself was, it was so valuable, but no one can really invest directly in the internet. It was all the companies on top of it that got super rich and all the value accrued to the top. Whereas with blockchain, there's the belief that the protocols themselves, Ethereum, for example, which is the biggest percentage of my portfolio, I believe that a lot of that value accrues to the protocols and all the other things that can be built on top of them, that sort of adds value relatively to the protocol as well. So I own, more than just Ethereum. There's plenty of overlap here between large caps and platforms. You guys know that I've covered plenty of the different protocols out there, and I own a little bit of each of them because it's a hot competition. There's plenty of projects trying different things. It's a bit of a hedge for me. There's plenty of room for growth and for more than one protocol to be successful. But I do believe that those two are, the biggest things that are going to be disrupted by blockchain. So that's 70% of my portfolio. Now, some people only love Bitcoin and they're 100% Bitcoin. That's fine. Other people are 100% altcoins. That's fine as well. But you have to acknowledge that sort of risk to reward. And that's how I'm trying to strike up a balance here as I get into the altcoins. So large cap coins sit somewhere in the middle here on this risk scale because a lot of them that are acting as currencies have got more regulatory certainty around them. They're listed on a number of exchanges. The traders love these as well, so there's a lot of liquidity. They tend to be the projects that have been around the longest, or projects that are just household names and already producing revenues, in the case of Binance, for example. So these large cap coins are, again, where I think a lot of money is going to flow, particularly that smart institutional money. They're not going to go chasing these real small speculative coins. So much money is more likely to flow into these assets that are lower risk, and we're still relatively early on in terms of the blockchain story and journey. I believe we're going to have more of these cycles. Mid-cap coins, this is where I start to really look at projects with good fundamentals. Now, sometimes fundamental analysis just goes out the window and it's all about hype and what exchange is it trading on, but I'm setting my portfolio up for the next couple of years. So fundamentals take a long time to play out, just as it did with sort of Bitcoin and Ethereum in the early days. So I'm looking for individual projects that I believe are a good application of blockchain technology, disrupting individual industries. So in the world of venture capital investing, think of it like planting seeds. I'm trying to cover, for me personally, I've got about 24 of these smaller projects, and I only ever invest maybe 0.5% to 1% of my portfolio in them initially. Now that way, there are going to be projects that fail. We're never going to pick 100% winners. But if a few of them fail and we're picking good projects fundamentally, plenty of those projects have already grown into the mid cap or large cap. Even Ethereum initially, when I invested, it was very, very risky and early on. So think of it as planting seeds. Hopefully these projects disrupt their individual industries and capture market share off other businesses that are in those fields. And that is how I really think about the mid caps and small caps. And fundamental analysis, a couple of year time frame, I believe we are going to have more alt cycles, or alt seasons as people call them. I know Bitcoin is really dominating at the moment at time of recording, but it's just this cycle that's played out so many times. And I know a lot of people have only seen the 2017 cycle, but I've done videos on human psychology and FOMO and how new retail participants will enter the space. So watch those if you haven't already. Now we get into the danger zone, small cap coins, ICOs, IOs, and STOs. You're investing in startups, and startups fail all the time. And in the crypto world, there's scams out there. There's genuine projects that still won't succeed because they can't find developers or they run out of money. Their Ethereum price went down after their ICO and they didn't sell. There's so many things that can go wrong. So when I say 99% of projects are going to fail, there's more than 10,000 digital assets out there these days. So a lot of people don't really believe that. But I certainly do believe in 5 years' time, there may only be like 100 really good projects with real products, that sort of thing. So finally, trading. This is probably the riskiest thing you can do in crypto because margin itself is so readily available to beginners. Anyone can log into an exchange and start trading 100x. So this is where people lose the most money the fastest. Now, I love trading. I probably keep around 10% of my portfolio aside to do some trading. That way you can hedge your entire portfolio with margin if you need to. There's some great indexes out there now. I'm not going to go into that today, but trading can be a really important part of your portfolio if you're going to get into this a little bit more than just casually. But for beginners, just be so careful. Now, other people will be trading full time and maybe not even have a long-term portfolio. That's completely up to you guys, but just be aware that I'd encourage you to take the time to learn how to trade, do a course, use a practice account, all those things before you dive in the deep end and lose money when you're trading against really experienced traders. So the final thing I want to talk about is taking profits. And these days, through the world of decentralized finance, DeFi, as you might have heard of it, we can take profits, take out loans, all these things directly from our hardware wallet. So for some people, it's going to be very favorable to take profits into a more liquid coin like Bitcoin or Ethereum and then sell that all at once. So we have DEXs that we can swap our coins on, decentralized exchanges, all from the comfort of our hardware wallet. Now, this gets back to the risk of having a low cap coin that's not listed on a lot of exchanges versus having these where you can click and take profits from Ethereum straight into the DAI stable coin at the click of a button from your hardware wallet. And a lot of people don't really think about that how to take profit and when to take profit. In terms of when you should take profit on an individual coin, there's two cycles you need to be aware of. So firstly, coins have their micro cycle when they're being listed and there's that excitement when other exchanges list them and they have good news. In the short term, we see these big spikes. A lot of the IEOs have done this recently. Big spikes, and then reality hits and they come back down to earth in the following weeks. So this is when you have to have some sort of trading knowledge, because it's very hard if you have no idea how to look at a chart on knowing when to take profits in the short term. But as a general rule of thumb, if nothing's really changed fundamentally and something is jumping hundreds of %, that's when you should probably take a little bit of profit. But it's the macro cycle that's more important to me. So when everything went up together, that is when you need to be taking profits. 10%, 20%, your initial investment. If it keeps going up, hey, another 10 or 20%. And that way you're always backing yourself and taking chips off of the table. So even if eventually you can't lose if you're constantly doing that. You're paying off your initial investment. Now, I believe we are going to have more of these longer term cycles where altcoins outperform Bitcoin for a time. But generally, I still believe Bitcoin is going to dominate. It's got so much room to grow in terms of market cap when it continues to disrupt these banks and gain traction. So that's how I've set up my portfolio. Lower percentages to the riskier assets. They may grow. I might be taking profits. I've got a higher percentage of Ethereum than other people maybe in their platform category because I was an early investor and I'm just so bullish on DeFi. I believe that's going to pick up the slack around ICOs. But I believe other projects are going to be the protocol that infrastructure gets built on top of and give them value as well. So hopefully that's given you a nice balanced opinion on how I think about my portfolio, how to gain risk to reward balance and just being aware of that risk. And if you want to know exactly what crypto assets I own, I do share that information with members and you can join below. So I hope you guys have enjoyed that video. Please smash that like button, share this around, subscribe if you haven't already, and I'll talk to you again soon. Cheers.